Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, February 4th. We had another nice day, so we had two good follow-through days in the markets, and we were kind of looking for this, right? We were saying markets are at a critical point here, so we're either going to have to rally and move higher, or we're going to really start breaking down. So we actually held these critical point, these levels, these reaction levels, and now where do we kind of go from here? So we know we have non-farm payroll numbers that are coming out on Friday, so that's going to be a real big risk event. So, you know, if you are holding positions, either adjust, maybe hedge your position, or for that matter, if you feel comfortable where your positions are, then fine. But remember, we can get big swings, and it's not what the numbers are, it's how the markets react to the non-farm payroll numbers. So let's just keep that in mind. So we had two decent days. I'm going to go through the indexes. No indicators today. They don't move they don't change quickly. So there's really not much to show you. But I want to show you some repetitive patterns that we're seeing here in the daily charts of the major indices that we follow. And the first being is the transports, right? So transport's definitely our leader. And you can see here we have a descending triangle, a symmetrical triangle, if you will. And many of these patterns are showing up in our indices. Now, that doesn't mean that it's going to break down or break up. Really what it means is that the symmetrical triangle could break either way. So it really is sort of a neutral stance, and you can see why. I mean, we really haven't gone anywhere since, I would say, way back into November here. So we moved up and we made a new high, and then pretty much we've been making lower lows and lower highs actually within this triangle. So we really want to examine what the breakout, when and if this market does decide to break out. The good thing about it is we are above the 50-day moving average, above the 20, and back above the 8. So we did make a price did make a move higher, closing above the previous day high. So we had an outside day reversal from this day, and then we just concluded and we just confirmed this reversal on Monday. So that's a good thing. So we had a nice reversal here on Monday. Too, we had follow through, and now today we'll see where we go from here. That's going to be the critical juncture. Now we could actually tag this upward trend line and then fail again, and that's something that I'm going to be waiting for here because I'm watching to see if we do decide to break out here. So there'll be some big factors involved if we break out. Obviously, the indicators are unwinding their overbought reading. Very good sign. As you can see, we tested the lows here, and then we actually rallied. So let's take a look at another index. Let's take a look at the spiders, right? SPY, S&P 500 tracking ETF. Same thing you could see here, pretty much the same. But look what we have here. Same thing. A little bit more pronounced of a descending triangle, if you will. And you can see we've tested these lows many times. When you keep knocking on the door eventually will break. So I'm not looking. I'm not saying that we're going to break lower, but we need to really hold these upper areas here, and we need to stay above the 50-day moving average. If we take this lower trend line, then then I'd say we got a great shot of at least challenging these highs up here, okay? Which is really not that far away. But what we really would like to see is all the indices at the same time break higher, break out to at least challenge the highs, and then break higher after that. Now, what I'm seeing here is you could see the indicators are not, the RSI and MACD have not broken above this downtrend line. So still have a little bit of weakness here, guys, okay? So let's just keep that in mind. Let's keep it in perspective. Obviously, when you're trading during the day, it means a little bit less than when you are swing trading. So we're at these extensions on the spiders. So let's see what happens here. Let's take a look at the Qs. Same thing with the Qs, right? You see this little descending triangle, if you want to call it symmetrical, but you see the patterns are the same. So we have the same here, and this the technology sector didn't quite get to this upper in the range, which is a little bit of a concern. Also, the banks and financials, the XLF, have not gotten back above. It is still in a downtrend, and that's also not a good thing if you're a bull. That's very concerning because we need the banks, financials, and technology to move along with U.S. indices. Okay, otherwise you get a failed rally, and that's what I'm looking for here. If we start to touch these upper end of the trend line, and again, even if we do touch it, what are we doing? Lower lows and lower highs, lower lows and lower highs, and that's not what we want to see. Okay, now here's something that may be a factor here, and this is the IWM, which is the Russell 2000 ETF. As you can see, it has been in a range since October. of 2013. All year we have been in a range. This is actually a very bullish sign on the weekly chart. And mind you, the weekly charts actually do look pretty good here. This here is, to me, is acting as a small bull flag on a weekly chart, right? So if it's a weekly chart, it's not that that small. But if you go like this here's a small bull flag at the upper end of this resistance band, which is 120, let's call it 120.75. Now, if the IWMs break out of 120, now remember, on the Russell, on the future, the TF, we were looking for 1180 to hold. Well, we broke down, and now we've held, and we're above the 1180. So that's actually a very good sign. Now, if the IWMs start to break up to the outside, remember, we've had a one-year consolidation of just ridiculous chop. If we start to break out here, and the IWMs take out the 120, and you're looking at blue skies, this ETF, okay, and Russell 2000, which would be the index, will probably take every other index with it, okay? And if that's the case, you're going to have new order flow come in, and that's going to push equity markets higher. And then we're looking at a 2100 to 2150 first target, upside target in the ES, okay? So let's just make sure we keep an eye. Now, remember, if we fail miserably, then we can easily go and test these lows and then even go lower. Because you could see we really had very little breaks in between. And if you put volume profiles and zones, which I'll do tomorrow, you'll see we'll have thin zones in certain areas. And if we do break down, we could actually fail miserably and really move to the downside. I don't think that's going to happen, at least at the moment. We have a nice bull pattern here, bull flag, and we're just underneath the resistance band. So let's keep an eye on that. Let's take a quick look at the daily chart. And what do you have here? Symmetrical triangle, more pronounced symmetrical triangle. The others were, I'd say more, I would call it more of a descending triangle. But we have a nice big symmetrical triangle here. And you can see it's sloppy, very sloppy, this the Russell. However, we've maintained a 38.2% Fibonacci retracement. So if we break back above this, then most likely we challenge the highs. And if we can challenge the highs and break back above that weekly resistance band, then I think that we're off to the races, okay? So that's what I'm looking for in the coming days. If that does not happen, and remember, if we do break back above it, one day is not going to make a trend that we're going higher. We need to see a little consolidation above that was resistance now being support, okay? One day is not going to do it. Maybe 2-3 days above that 120 band in the IWMs, and then it takes out that consolidation. Then I say we're off to the races. We have new order flow coming in. So let's keep that in mind for this week trading, okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.